I'm joined now by CEO of CFG Advisory, Mr. Tilewa Adebajo, to review some of our big stories for today in greater detail. Thank you for joining me on the show today, Mr. Adebajo.
Good morning, Rolake.
Yeah, good morning. So the first story I wanted us to quickly take a look at is Kenya. William Ruto seems to be courting international support and has made a bit of a headway with some of these deals being announced. What do you make of this whole visit to the US?
Well, I think it's international diplomacy, at its height. There's a new world order, as you can imagine, with Russia, China, and India forming an emerging bloc. And the United States is desperate for allies, especially in Africa, because they seem to be losing ground to China and, of course, with Russia. And as you can see with the recent issues in the Sahel, with Niger, they're losing their base in Niger, which they've invested over $100 million into, and some other bases. I think America is relooking at its strategy, and I think Kenya seems to be a natural ally in terms of their market economic principles and their openness to trade and investments. And of course, you have a president who understands the game, and he's taking advantage of that. And of course, as you've seen, he's been invited to Washington, and red carpet has been rolled out.
Yeah, it has been rolled out. And he seems to be making some success because Kenya has also had its fair share of economic challenges. They've been doing a bit of belt tightening recently. So all these deals that are being announced, for instance, the data center, the highway deal, the $3.6 billion deal, what is the likelihood that these things will actually happen?
Of course they're going to happen. China has a record of implementation, even with the Chinese. Don't forget they've built that railway line from Mombasa into the hinterland, and not only into Kenya, but also into the landlocked African countries that surrounds them. So the port of Mombasa is not only for Kenya, but also for the rest of the African countries. So they understand the issue of trying to put their country in terms of perception. Most of all these things is about perception and confidence. And if you can build the right perception and confidence, you can see. And, Nigeria has been a victim of this, because as you can see, Microsoft shut down its operations in Nigeria and announced a big investment into a massive data center in there. And of course, Kenya has also, they're riding the wave of climate change and global warming and green energy. And they're boasting that 90% of their energy is from geothermal sources, that they're clean energy. So these are the buzzwords and I think the issues that I think gives them affinity to the rest of the world. And of course, don't forget that Kenya traditionally has been a big tourist hub.
Yes.
If you talk about safari in Africa, everybody goes to Kenya for the safari. So with that tourism background, I think they're now putting investment on top of that.
Yeah, interesting. And, when I think through some of the African leadership that we've had, it's so critical for driving economic prosperity, right? There were days when we had really strong leaders on the continent. I remember the NEPID days being driven by 3 or 4 strong political strongmen on the continent. Hopefully this inspires other African leaders in that direction, but we'll be keeping a close eye on this as well. And of course, Kenya is a major tech hub. We want to talk about Nigeria. NBS released the GDP figures. And when I look at the quarter-on-quarter figures and I juxtapose that against the $1 trillion economy, I think to myself, this is a long road. So what do these latest figures tell us about what has been happening with the Nigerian economy?
Well, I think what it tells us is that we need to drop this 1 trillion economy buzz that we've been talking about. As I've told you, as I've said in many forums, Nigeria is already a 1 trillion economy potential, easily. There was a time our GDP was close to 700 billion. And, unfortunately, in the last 8 years, we've lost 300 billion of our GDP. And also the devaluation hasn't helped. If we had gained 300 billion of our GDP in the last 8 years, would have easily been there. So right now is a long road. So what these figures tell you, quite simply, is the fact that month on month, I think there's a decline in GDP growth. Year on year, it's been an increase, but if you take a look at the trajectory of GDP growth, it's now on the decline. And that's a source of concern. Nigeria is an economy that has been in stagflation. And stagflation, as you know, is low economic growth. high unemployment and runaway inflation.
Yeah.
So that still is the problem in Nigeria, and these GDP numbers are not very encouraging. And it shows that the Nigeria's economy is still in stagflation. And Nigeria is an economy of 200 million people. We cannot be talking about 3% GDP growth. It hasn't even moved the needle. If we're talking about serious economic growth in a country like Nigeria, with our population base, we should be looking at a minimum of 8 to 10% GDP growth on a sustainable basis.
Yeah, I mean, 8 to 10%. I just remembered some of our neighbors, Cote d'Ivoire is growing at 7%, at less than about a third of the population of the country. But why these figures may be concerning, but before we get to that, I wanted to talk about what this means for monetary policy. But looking at some of the contributors to the GDP figures, one of the things the NBS said is that services were a major contributor to growth, notwithstanding the very low rate of growth. So how do you see some of the components of that contribution evolving over time? At services contributing to growth, we didn't hear too much about agriculture, we didn't hear too much about manufacturing. What's your take on those?
Well, it just shows you the state of productivity within the economy, which shouldn't surprise you, because as you know, manufacturing has suffered over the years. What has been recovering really is oil and gas. Oil and gas is now at about 6% growth, which was negative. Towards
and in fact, production increased to 1.75.
Yeah. But crop production, I think, has been quite sustainable. But again, the challenges we have in terms of getting food to markets, I think in terms of logistics, is still what is hindering GDP growth in agriculture. But we shouldn't forget that agriculture is still the highest components of our GDP. But basically, I think the growth, it just shows you the fact that there's issues with the economy in terms of the structural reforms that we need to carry out, because our service sector is still thriving, but unfortunately, the key sector which we require, which is our manufacturing base, still has significant amount of challenges.
Yeah, indeed. Which then brings us to the point now, with GDP figures like this, you talk about stagflation. Interest rates have gone up. Right? And we know if interest rates go up, there's an impact in suppressing demand. And so the question is, can Nigeria eat her cake and have it? As we sort of look at the NPR policy, which is a reference rate for borrowing, by consumers in banks, for instance. I'm concerned because it means that rates may be higher for longer. This has implications for demand, for our GDP aspirations. So tell us about what this picture is looking like.
Well, you have to dimension this and understand where we are and how we got to where we are. In the last 8 years, under the Buhari administration, we had 2 recessions. One of them was self-induced because their policy formulation was out of sync with the realities of the Nigerian economy at that point in time. If you go to a party and you get drunk, then you're going to have a hangover afterwards. And I think what is happening to Nigeria now is the hangover of economic policy decisions we've made over the last 4 or 5 years. First of all, I think what we tend to forget is the fact that between January last year and January this year, money supply went up by 80%.
It's crazy.
It went up from about 54 trillion to about 90 trillion. Within January and February this year, it went up another 2 trillion. So money supply currently stands now at about 97 trillion naira. That is significant. Significant amount of that increase came from 30 trillion of ways and means. Between June and December last year, 7 trillion was also drawn down against from ways and means to finance the supplementary budget. As you know, ways and means financing is illegal because the limit has been exceeded. So the limit for ways and means financing is about 1 trillion naira. They've taken that limit to 30 trillion. So you have that significant amount of money coming into the system. So there's going to be an impact on the economy. So you now find a situation whereby this time last year, the naira was about 450 to 1. Today now, the naira is about 1,500 to 1. So you've seen that the naira has been devalued about 300%. That is significant, shocks within the system. So what has happened is the fact that in trying to restructure the economy and put it back on the path of recovery, certain reforms have been put in place, but unfortunately, the sequencing of those reforms have not been perfect. So the outcome is what you're seeing in terms of GDP growth and our need to increase interest rates. And if you take a look at the economic modeling that was done by the Article 4 report from the IMF, it shows very clearly a high correlation between the money supply and the depreciation of the naira.
You're saying T-bill auction after T-bill auction, rate increase after rate increase, we still not been able to get a hang of money supply. Are there some governance and...
No, we do have a hang on money supply. What I'm trying to say is that it's at 97 trillion.
Yeah.
But you see, those rate shocks, those rate increases cannot all come at once.
They have to be phased and gradual.
Phased. And the decrease that you're expecting from inflation is going to be over time. So all these actions you're seeing, you're not going to see any impact until the end of the fourth quarter of this year. So, and we need to be consistent with these policies over an 18-month period for us to begin to see the desired results.
No, fully understood. Certainly.
So it's a marathon, not a sprint.
Yeah, totally understood. Now, if we go over to what we all call the real economy, looking at borrowing rates, consumer credit, credit for SMEs, stimulating demand, and considering the fact that the CBN's primary priority now is price stability and orthodoxy. It's no longer pushing the DFI, development finance, financing SMEs and all of that. Which way for small businesses and Nigerian corporates and businesses that have to borrow at such huge rates? Do we need another type of intervention?
No, we don't. We need a correction.
Okay.
And what we have to understand that this whole process is temporary. We're 6 months into this reform process.
Right.
We need to stick with it for another 1 year. Just as you might be complaining about the SMEs and everything else, guess who is happy? The pension funds.
Of course.
The investors.
The investors, the FPIs.
Now the people who are saving their money are now having a good time. So you see, and the rates are better for them and they're okay. But at the time when the rates were low and they were not doing so well, nobody looked their way. So what you need to do in an economy is, because of the disequilibrium and the choices of the Buhari administration, and the 7 trillion this current administration has drawn down on ways and means, there's a price we have to pay for that. And it's going to take us another year for us to stabilize the policy.
Another year?
Yes, another year at least. And then once we get that stability, then we can now balance out the rates, whereby both the lenders and the investors are okay. So you need to be able to have like a balancing act. But in a situation where you have extreme money supply, as we've seen at 97 trillion, you need to be able to make some drastic changes to go back into some sort of equilibrium.
Yeah, and you know, an additional year and the stability we're looking for may come either through holding the MPR or hiking the MPR further. Now, we can't get into the mind of the MPC, but more broadly, the question of stimulating our FX revenues is still, you know, it's a perennial theme that everybody talks about. Seeing what has happened to oil production recently, we're sort of stabilizing back up at 1.7 million barrels a day. Are there prospects for the non-oil sector as well in terms of FX? I guess it goes back to the manufacturing and agriculture and all these other things. But what do you see can be done, at least to help maybe cushion the effect of this sort of credit crunch that Nigeria is going through?
Well, stability, I think what we're seeing in terms of price stability, FX is always a problem we talk about. And I think we have to understand that the course of FX fluctuations now is based entirely on speculation.
Okay.
It's not, there's no demand and supply. And another problem that is causing the FX is the 97 trillion you're seeing in money supply. That's another driver of it. What exactly is the demand for foreign exchange in Nigeria? Nobody has been able to tell you and what is driving it. If you take a look at our terms of trade, our biggest trading partner is China. We're importing about between 18 to $20 billion worth of goods from China. Our largest export country too is India. So our dollar requirements, or our two largest trading partners, both for import and exports, use rupees and renminbi. So the question is, what is driving the demand? So the question is now, what is now driving your demand for your dollars? It's highly speculative because our terms of trade are Balance of payments, I think, are slightly negative.
Right.
But, the trade deficits are not something significant that we cannot augment. We have about $25 to $30 billion worth of diaspora funding. And now with the foreign portfolio investments coming back into Nigeria, at a high, we had close to $20 billion worth of foreign total foreign inflows at a point in time. That is really where the challenge is.
Right.
Because we used to have about $20 billion of capital importation every year in 2019 as a high. That has dropped to about $3 to $2 billion. That is really where the challenge is. And that's what we need to bring up to be able to achieve some stability in dollar supply into Nigeria.
Yes, indeed. And, just thinking through all these challenges, we're almost a year into, a year on Wednesday into the Tinubu administration. What would you count as perhaps the biggest success from an economic policy perspective? And your success is relative, like you said, it's a marathon, not a sprint. But if there was one thing you say, the government is on the right track, what would it be? Very briefly, because we have to end.
Well, success on the economic front has been very limited, to be honest with you, for me to be very honest with you. But the only thing I can see now that is in sync is the synchronization of monetary policy and fiscal policy. Okay. So I think if there's any success that's been accomplished in the last 1 year, is the harmonization and synchronization of monetary and fiscal policy.
Yeah.
What has been lacking is the sequencing on the implementation of the reform policies. I think we all agree that the reform policies are needed, but the implementation has been a bit, has not been encouraging.
Yeah, I mean, you said it best, really. It's really about, sometimes it feels like a bit of trial and error until we get it right. But a marathon, not a sprint. Great speaking to you, Mr. Tilewa. Adebajo, CEO of CFG Advisory. Thanks for coming on the show.
Thank you.